Welcome back to the Wednesday edition of Tech Stocks Daily Podcast. Buckle up as we dive into a whirlwind day on the NASDAQ, featuring tech titans Tesla, Microsoft, Intel, and Apple. Today, we unravel the saga surrounding Tesla's challenging quarter, Microsoft's AI-driven renaissance, Intel's financial transparency moves amidst losses, and Apple's strategic pivots amidst regulatory scrutiny. From leadership controversies to groundbreaking AI integrations and strategic expansions, these developments paint a complex picture of innovation, strategy, and resilience. Let's unpack what these narratives mean for the tech landscape and your investment decisions. Stay with us for a roller coaster ride through the ups and downs of today's tech stock market. In today's technology news, Tesla Inc. found itself in the spotlight for multiple reasons, all pointing towards a turbulent period for the electric vehicle giant. Amidst a backdrop of increasing competition, internal challenges, and a changing economic landscape, Tesla's recent activities and financial outcomes have sparked wide-ranging discussions. To begin with, Ross Gerber, CEO of Gerber Kawasaki Wealth and Investment Management, publicly criticized Tesla CEO Elon Musk for the company's less-than-stellar first-quarter sales. Gerber pointed the finger directly at Musk's behavior, claiming it to be the root cause behind the company's inability to sell its cars. This exchange prompted a terse reply from Musk, who dismissed Gerber's remarks by calling him an idiot and pointing out the global challenges faced by the EV market, as evidenced by the sales drop at Chinese EV maker BYD Collited. Further deepening Tesla's woes, JP Morgan cut its price target on Tesla stock, highlighting concerns over the company's growth amid a record delivery miss. Ryan Brinkman, a JP Morgan analyst, emphasized the EV maker's falling demand and intensifying competition, all contributing to a gloomy outlook for the company's growth. This adjustment reflects a broader sentiment of skepticism regarding Tesla's short-term profitability and market position. In a surprising countermove, Tesla Inc. had introduced a 0% interest financing program in China, aiming to counter the downturn in deliveries and revitalize its market share in this critical region. Despite such aggressive tactical maneuvering, analysts remain cautious, pointing out Tesla's market share decline in China and ongoing supply chain and demand challenges. In a seemingly parallel universe, Tesla has announced plans to explore potential sites in India for a new electric car manufacturing plant, estimated to cost $2 to $3 billion. This strategic pivot towards India indicates Tesla's ambition to diversify its manufacturing bases and tap into one of the world's largest emerging car markets. Yet this move comes amidst Tesla's troubling delivery numbers and market share concerns in other regions, raising questions about the company's global strategy and operational focus. While Tesla aims to remedy its sales and production dilemma through international expansion and financial incentives, the multiplying critiques from investment analysts and the financial market suggest that Tesla's path forward is fraught with uncertainty. Whether these challenges represent temporary hurdles or more systemic issues within Tesla's business model remains to be seen. However, one thing is clear: Tesla, once the uncontested darling of the EV world, now faces its most critical test of resilience and adaptability. Microsoft made headlines today for multiple reasons, showcasing the tech titan's impact across various aspects of the tech industry. First up, Microsoft received a striking endorsement from analyst Dan Ives of Wedbush Securities, heralding what he described as the company's iPhone moment. This bold assertion stems from Microsoft's ambitious integration of OpenAI's advanced artificial intelligence, notably ChatGPT, across its extensive suite of products, signaling a significant leap forward that might redefine the company's trajectory analogous to how the iPhone did for Apple. With impressive Copilot subscriber growth and the Azure platform leveraging AI, Microsoft is evidencing a transformative phase in its evolution, leveraging AI at a scale and pace potentially unmatched in the sector. Concurrently, Microsoft grapples with technological frictions, as illustrated by recent challenges with Gmail. Microsoft Outlook users have encountered issues sending emails to Gmail accounts, attributed to Gmail's rigorous new sender authentication requirements, aiming to curb spam. This predicament underscores the intricate dance of interoperability and security standards in the tech ecosystem, with Microsoft floating workarounds for beleaguered users. However, not all the buzz is positive. Microsoft finds itself under scrutiny for cybersecurity lapses linked to a 2023 hack orchestrated by a group with ties to China, exploiting vulnerabilities in Microsoft's cloud security. This breach, penetrating high-level U.S. officials' accounts, casts a shadow over Microsoft's security protocols, drawing federal criticism for what's been dubbed a cascade of preventable missteps. The event underscores the ongoing struggle against sophisticated cyber threats and raises questions about preparedness and accountability within leading tech entities. Finally, addressing the AI frontier, Varonis introduced a new security solution tailored for Microsoft's AI-driven Copilot platform, indicating growing enthusiasm and caution in equal measure around AI app security. In summation, Microsoft's landscape today is one of stark contrasts. Groundbreaking strides in AI innovation juxtaposed against heightened scrutiny over cybersecurity rigor. These developments spotlight the multifaceted challenges and opportunities for a titan maneuvering through the rapidly evolving tech frontier. Intel has been making headlines today due to several critical developments surrounding its financial performance and strategic adjustments, particularly in its foundry business. The company disclosed a notably large operating loss of $7 billion for its foundry business in 2023, a significant jump from the $5.2 billion loss in the previous year. This has inevitably led to Intel's stock experiencing some downward pressure. In an effort to provide greater clarity and transparency, Intel announced a major reshuffle in its financial reporting structure. Under the new framework, starting in Q1 2024, Intel's diverse operations will be reported under distinct segments, including Intel Foundry, which now becomes a focal point given its current financial woes. This move is part of a broader strategy to drive increased cost discipline, optimize operational efficiencies, and ultimately, enhance shareholder value. Further diving into the specifics, Intel Foundry, which is pivotal to Intel's pivot towards a foundry operating model, is grappling with burgeoning losses. The business saw its revenue dip by 31% to $18.9 billion in 2023 from $27.5 billion in 2022. Despite these challenges, Intel's leadership expressed optimism, projecting that the foundry business's operating losses will peak in 2024, with ambitions to reach break-even by around 2027. Additionally, Intel is under the spotlight due to considerable government backing under the CHIPS and Science Act. This infusion of funds underscores a national strategy to rejuvenate semiconductor manufacturing within the U.S. Intel's commitment to reclaiming its technological leadership and manufacturing prowess, particularly against the backdrop of stiff competition from rivals such as AMD, is also a critical element in this narrative. The company's vision to leverage its foundry services to spur growth, despite the current downturn, suggests a long-term play that is garnering significant attention from investors and industry watchers alike. In today's Tech Roundup, Apple certainly stole the limelight with several intriguing developments. Firstly, analysts are setting the stage for a new era at Apple, predicting a significant shift towards services and possibly artificial intelligence, signaling a departure from its iPhone-centric growth. This recalibration suggests that while Apple might continue growing, the pace could be more modest compared to its explosive past. On an equally captivating note, the buzz around iOS 18 unveils potential for a massive redesign inspired by Vision OS, hinting at a fresh, visually appealing interface that could revitalize the user experience. Moreover, in line with the European Union's Digital Markets Act, Apple is making waves by allowing iPhone users in the EU to download apps directly from developers' websites. This move could dramatically alter the app distribution landscape and underscores Apple's adaptability to regulatory pressures. And not all news is rosy. Apple finds itself under the microscope, facing criticism and legal scrutiny. The tech giant was called out by Jon Stewart for reportedly blocking an interview with FTC Chair Lina Khan amidst antitrust investigations, a move spotlighting the ongoing tension between regulatory bodies and big tech. Additionally, Apple, along with Trupanion, is under investigation by Bragar, Eagle, and Squire PC for potential legal and business mispractices, echoing broader concerns about tech giants' operations and market dominance. From significant shifts in strategy and innovative leaps to legal challenges and regulatory compliance, Apple's diverse headlines today paint a complex picture of a tech behemoth at a crossroads. What are your thoughts on these developments? How do you see Apple navigating its challenges and opportunities in the years ahead? Let's get the conversation going in the comments below. Today's tech news paints a nuanced picture of the present tech market sentiment, oscillating between optimism due to innovation and concern over financial and competition pressures. Here's a more detailed breakdown. 1. Tesla is clearly facing a slew of challenges, evidenced by criticism from significant investors concerning leadership and strategy, particularly Elon Musk's handling of the company. The cut in price target by J.M. Morgan, due to concerns over the company's growth amid falling demand and steep competition, further exacerbates the sentiment. However, Tesla's aggressive measures, including 0% financing in China and plans for expansion in India, reflect a proactive strategy to navigate through tough times, keeping investors on their toes about the company's resilience and adaptability. 2. Microsoft presents a contrasting scenario where innovative strides, particularly in integrating AI through OpenAI's ChatGPT, create a positive buzz and highlight the company's forward-thinking drive. Nevertheless, challenges, such as cybersecurity lapses and technical frictions with Gmail, underscore the balancing act that comes with pioneering at the technology frontier. The company's response to these challenges will be crucial in maintaining investor confidence and momentum in leveraging AI. 3. Intel is in the spotlight for its financial setbacks in the foundry business, with substantial operating losses that raise eyebrows about its strategic direction. However, optimism is injected by Intel's long-term vision to turn around the foundry services, underscored by the significant governmental backing under the CHIPS and Science Act. This portrays a mixed sentiment where immediate financial health concerns are counterbalanced by long-term strategic optimism. 4. Apple finds itself at a pivotal juncture with anticipated shifts towards services and potentially AI, signifying a strategic evolution beyond its iPhone-centric model. The openness to new regulatory frameworks, as seen in the EU's app download provisions, showcases adaptability, yet the company isn't without its challenges. Legal scrutiny and criticism over alleged obstruction showcase the scrutiny big tech faces, highlighting both opportunities and hurdles in navigating the tech landscape. Overall, the market sentiment is a blend of cautious optimism and concern. The concurrent drive towards innovation, with significant bets on AI and strategic shifts, indicates an underlying confidence in the tech sector's potential to evolve and grow. However, financial uncertainties, operational challenges, and competitive pressures serve as stark reminders of the volatile and unpredictable nature of the tech industry. The coming periods will be crucial in defining whether the tech giants can effectively navigate through these complexities, thereby shaping broader market sentiment. Let's talk about Tesla. Given the whirlwind of news we've had today surrounding Tesla, from the critique by investor Ross Gerber to the introduction of a 0% interest financing program in China and plans to explore manufacturing in India, the decision to sell, buy, or hold is a bit like trying to hold on to a live wire. So if I were to make a move today based on the provided information, I'd lean towards holding. Here's the reasoning. Tesla is clearly maneuvering through choppy waters, with considerable financial challenges and market position criticisms coming to light. However, Elon Musk's countermeasures, particularly targeting the Chinese market with 0% financing and potentially establishing a manufacturing presence in India, show an aggressive strategy to tackle both market share recapture and geographical diversification. True, JP Morgan's cut in Tesla's price target is concerning, highlighting the key issues of falling demand and stiff competition. Yet, Tesla's bold initiatives to refresh demand and its pivot towards manufacturing in India signify that this electric vehicle behemoth is far from throwing in the towel. The plans in India for an electric car manufacturing plant, estimated to cost $2 to $3 billion, while speculative, indicate Tesla's long-term commitment to broadening its global footprint and reducing dependence on more saturated markets. However, it's critically important to factor in that Tesla's path is fraught with uncertainties. The current critique and the unpredictability surrounding Musk's management style can influence both market perception and the company's financial standing in the short term. So, why hold? The move is essentially a bet on Tesla's ability to navigate through its present challenges and leverage its aggressive strategies for market revitalization and expansion. Tesla has faced setbacks before and has managed to turn situations around in its favor, marking significant recoveries. Holding allows an investor to wait for the dust to settle on the current upheavals, with a cautious eye on the company's ability to execute its new strategies effectively. Remember to do your own research, listen carefully to market and industry insights, and plan your investment moves accordingly. In today's bustling tech news landscape, we navigated through the turbulence surrounding giants like Tesla, Microsoft, Intel, and Apple. Each presented a unique tableau of innovation, strategic shifts, and a dance with challenges both old and new. Tesla's maneuvering through criticisms and market stratagems, Microsoft's AI leaps juxtaposed with cybersecurity snags, Intel's financial reshuffling amidst foundational ambitions, and Apple's strategic pivots alongside regulatory and legal reckonings paint a dynamic, multifaceted picture of today's tech giants steering through uncertainty, striving for growth. As always, the technology sector remains a realm of exhilarating opportunities and formidable challenges. Companies like Tesla, Microsoft, Intel, and Apple continue to push the boundaries, crafting the future in real time while navigating the ebbs and flows of market sentiment and operational hurdles. Today's insights offer a glimpse into the resilience and adaptability of these tech behemoths, emphasizing the intricate balance between innovation and the pragmatic realities of competition, regulation, and global markets. Stay tuned for more, dive deep into these narratives, scrutinize the strategies, and ponder the outcomes as we continue to explore the fascinating world of technology together.